Hello and welcome to this December 2019 exam session webinar, which is actually held for the paper F6 Pakistani variant. My name is Luqman Rafiq and I am the tutor for this ACCA paper F6 Pakistani variant. Now, I'm going to give a brief introduction about myself and about the syllabus. I'm going to discuss this thing that this webinar is going to be a very special one. The very specific reason behind this specific webinar to be a special one is that this webinar is being conducted for the first time ever for this specific subject. And the specific subject, which is the taxation Pakistani variant. So this is the first time that this webinar is actually being conducted. The second thing is that the webinar will comprise of the entire syllabus of ACCA F6 Pakistani variant, which is not attempted very much by the students residing in Pakistan. So, and the major reason behind that is they don't have much of the study support available. So they don't actually go for attempting this Pakistani variant taxation paper. Now, when you go into the practical life, so you come across a lot of issues. And the major issue that you come across is that you don't actually understand what exactly is the Pakistani tax law, because majority of the students have studied the UK variant of taxation. So this webinar is going to be helping you in order to attempt the Pakistani variant taxation. Now, a lot of the students would be actually be connected, and you would be using this webinar for the knowledge of the Pakistani taxation. So it's going to be equally important and equally informative for you people also who actually want to attempt this specific session. Now, I'm going to guide you something with respect to the session, that this session is actually going to be over a period of 5 days. And this session, our major objective is going to be, we are going to be very exam focused. And while being exam focused, what we shall be doing is we shall be covering the syllabus of ACCA F6 Pakistani variant and a complete syllabus of the ACCA F6 Pakistani variant. That is what we are actually going to be covering. The recordings of this specific webinar will be available on the Vimeo and they can be accessed from there. Anyways, let's move a bit forward. Let's start discussing. First of all, I'm going to introduce myself. My name Muhammad Luqman Rafiq. I've been in teaching profession for more than 10 years now. I serve as the Chief Executive Officer of an educational institution which is engaged in providing chartered accountancy and similar type of qualifications, having a campus in Karachi and Sakkar. I've also worked as a practicing tax and corporate consultant for a period of 7 years, and I've regularly been teaching the taxation for the ICAP CAF 6 at one of our campuses, which is Sakkar campus. Now, first of all, I'm going to give a brief introduction about this paper, taxation. One thing which a lot of you people would be attempting this webinar for the first time. In this specific webinar window, you will have the handout section. And when you'll go into the handout section, you can find the presentation slides over there also. So anyways, first of all, what I'm actually going to do is that I'm going to discuss that when we talk about the taxation in Pakistan, so what exactly are the various laws and regulations which are applicable for the taxation. So basically the various laws and regulations which are applicable for the taxation and which are going to be discussed during the course of this 5-day webinar include the following. Number one of them is the Income Tax Ordinance 2001. The entire income tax law is majorly based on this Income Tax Ordinance 2001. Then we have the Income Tax Rules 2002. These income tax rules actually guide you how the various things need to be tackled because the ordinance gives you a general law and the implementation guidance is generally available in the rules. Then we've got a Sales Tax Act 2006 and we've got Sales Tax Rules 2008 and the Finance Act 2018 and the Finance Amendment Act 2018. So these are the relevant legislation, relevant laws and regulations that we shall be considering while attempting this syllabus. Now next, If I talk about this exam session and Finance Act, so I would like to have a feedback from you people. You can actually write down in the chat window. So I would like to have a feedback from you people that what exactly is your objective and motto behind attending this session. What exactly are you expecting me to deliver in this session, and what is the purpose behind you attending the session? Do you want to attempt the ACCA Pakistani paper, or you want it for the CPD, or you want it for some other reason? If I could have a quick feedback suggestion from you people, that what exactly is the objective behind this attending this session for you. Okay, thank you, Anil. And anyone else? Okay, Imran, thank you for your comment. Rashid, thank you. Bilal, thank you. Hassan Ansari, okay. So what paper are you attempting? Okay, Jawad, noted. Anyone else would like to share that what exactly are your expectations from attending this specific webinar? Imad Ahmed, thank you. Okay. Um, so basically, we now have the comments from various students. So if I can sum up that what exactly is the major purpose of people attending the session is that a lot of people want to attend the session in order to have an understanding of Pakistani tax laws. A few people attending it for the CPD. A few people attending it for the exam purposes. So that's how the major audience is. Anyways, so let me guide you. My major my major basically approach is going to be, I'm very much going to be exam focused while conducting this session. And the major subject that I'm going to be considering is the taxation syllabus given by the ACCA for the Pakistani variant. So let me discuss with you that unlike the other papers, other examinations of ACCA, which are conducted 4 times a year, which is March, June, September, December, this F6 Pakistani variant is only conducted twice a year. So F6 PKN variant is only conducted twice a year, and that is basically June and December. So these are the 2 sessions in which it is conducted. It's not conducted in every single session. The second thing is that for the June 2019 and for the December 2019 session, the Finance Act 2018 will actually be followed. So basically, I will be focusing upon Finance Act 2018, and obviously there are changes in the Finance Act 2019. So I shall be highlighting some changes also while I'll be going through this specific version. Anyways, so first of all, let's talk about it. As you know that all the fundamental level papers of ACCA have become computer based now. Same is the case for the F6 Pakistani variant also. It's also going to be a computer based paper with 2 sections being section A and section B. Now, when we talk about these 2 sections being section A and section B, so how exactly are they being examined? So when we talk about section A, you have got 15 multiple choice questions worth 2 marks each. And for the section B, there are 4 questions which are worth 10 marks each, and 2 questions which are worth 15 marks each. One for individual and one for the company. Now, so this is how the PK variant taxation paper is going to be examined. If I move a bit further, so I'm going to discuss about the syllabus, that what exactly are the syllabus guidelines. So you could see some relational diagram with respect to the syllabus. It's actually going to give you an idea that what are the components of the syllabus. So you could see there are the 5 parts to the syllabus. Part A, which is the tax system and administration. Part B, which is about income tax liabilities of individual, etc. Part C, about the income tax liability for the companies. Then you've got capital gains, and then you've got sales tax. Now, let's move a bit further. Let's have a quick review of the syllabus. So basically, the syllabus, the first section of the syllabus is about the Pakistani tax system and its administration. So majorly in this specific section, you are being told that what exactly is the Pakistani tax system is, what exactly are the what are the various tax laws that are applicable. At the same time, what are the basic principles like following of the Constitution of Pakistan. At the same time, what are the tax ethics like tax avoidance, tax evasion, things like that. So something similar to this, which the majorly Pakistani tax administration system is. Okay, am I audible now? Okay, so part B of the syllabus is about the unincorporated entities, which basically, when we talk about the unincorporated entities, so that would include the AOP, which includes the partnership, joint arrangements, etc. So that is what is also going to be covered. Then part C is about the income tax liability for the companies, including all the heads of income. Part D about the capital gains. A lot of you people who are actually in the practical life would be dealing with the shares, the stock exchanges. So you would be interested in getting to know the tax implications about the capital gains. So we'll be discussing the capital gains also. And lastly, we shall be going through the sales tax. So this is how the syllabus is, that when we are going to be discussing about sales tax, we shall be discussing that what is the general scope of sales tax in Pakistan, what supplies are taxable, what purchases are taxable, how do you account for the sales tax liability, etc., etc. Various things that we shall be considering while we'll be discussing this. So this is how the syllabus is. So basically, I've given you a brief introduction about the syllabus, and I'm now going to share the Daywise plan, that what exactly am I going to do while discussing this taxation webinar. The day one, which is of today. So our day one, initially, we are going to have an introduction about the taxation system and plus the income from salary. So we are going to discuss about the introduction, which is the overall what exactly is the taxation system of Pakistan, and we'll be discussing about the salary income also. So that is what we are going to cover in today's session. And then day two onwards, we'll have income from business. Day three, we'll have other heads of income which are there in Pakistan, which includes income from property, capital gain, etc., etc. Then sales tax, and the last day is going to be the other areas of taxation. The session is going to be very exam focused. The session is going to cover up a few things in detail also with respect to um, the Pakistani tax law. And anyone who has any questions, you can write down in the chat window, and I'll answer them as soon as I get time. So you keep on asking the question, whatever questions that you have, I'll keep on answering them as soon as I get time. Mohammed Amin, you are asking, will it be considered in CPD hours? Yes, it will be considered in CPD hours. Anyways, so that marks the conclusion of the first presentation, which is about the overall introduction about this specific webinar. Okay, we are now going to move on to the next slide, which is basically the basic concepts of taxation. Now, then we talk about the basic concept of taxation. So first of all, you need to understand that whenever we are discussing about the basic concepts of taxation, so generally speaking, the first thing that I am going to be covering is the direct tax. I am not covering the indirect taxes right now. I am covering the direct tax. So the direct tax that we shall be discussing is the income tax. Now, when I talk about the income tax, so the income tax rules, the income tax law is covered by Income Tax Ordinance 2001. Income Tax Ordinance 2001. Now, when we study the Income Tax Ordinance 2001, so before we can move on to the various sources of income, the first thing that we need to understand is that we will have to develop the basic concepts that are prevalent in the Pakistani taxation or any taxation in the world that you would ever study. So let's start discussing that what are the basic concepts that we actually need to cover up first. Now, the first concept that we are going to cover up is about the concept of the tax year. Just like when we talk about accounting, we have a financial year. Similarly, when we talk about the taxation, we have got a tax year. So as per the Pakistani tax ordinance, there are three types of tax year. One of them is a normal tax year. The other one of them is a special tax year. And the third one of them is called a transitional tax year. Now, what exactly do we mean by this normal tax year, a special tax year, and the transitional tax year? So let's just start discussing about it. First of all, when we talk about the normal tax year, so as per the Pakistani tax laws, a normal tax year is the year from 1st July of any year till 30th June. That's a normal tax year. Like for example, if I talk about right now, so if I say 1st July 2018 to 30th June 2019, this time period, which is 1st July 2018 to 30th June 2019, this is going to be considered as normal tax year 2019. This is going to be considered as normal tax year 2019. Now, so basically, the normal tax year is a period from 1st July of a year till 30th June of a year. So whenever this 30th June is going to fall, in whatever year this 30th June is going to fall, that is going to be the name of that tax year. So for example, if we are talking about the period 1st July 17 to 30th June 2018, this specific time period is going to be considered as tax year 2018. So this specific time period is going to be considered as tax year 2018. So first of all, what's the normal tax year? So normal tax year in Pakistan is the period from July till June. July till June. Now, what's a special tax year? So special tax year as per the law is any period other than. As per the law is any period other than normal tax year. So any period other than normal tax year is considered to be the special tax year. So any period other than the normal tax year is considered to be special tax year. Now what exactly do we mean by this? When we talk about any period other than the normal tax year is considered to be a special tax year, so there are few specific sectors of which FBR is the Federal Board of Revenue, which is responsible for all the taxation laws in Pakistan. So FBR has actually prescribed for specific sectors a specific tax year. For specific sectors, like we have got a sector which is sugar sector, we've got a sector which is, let's say, we've got the sugar sector or few other sectors like textile sectors. There are few specific sectors where there is a specific tax year that is prescribed by the FBR. So that tax period is actually a period other than this July to June. So any period other than July to June is considered to be a special tax year. So usually what happens is FBR prescribes tax year for specific sectors. Yes, banking, we also have a separate tax year. We specifically have, I mean, depending upon the various sectors, so we have got these various tax years for them. Now, let's move a bit further. But any company can have a different tax year. Any company can have a different tax year. Like, for example, if I say that I operate an educational institution, Usually the relevant time period for us is 31st March. Now you would say why? Because what happens is when we talk about the 31st March, if I operate an educational institution where I am running a college, so a college, what sort of college? An intermediate college. So if I'm operating an intermediate college, my relevant period should actually be April to March. Why? Because what happens is my business operations run from April to March. The studies, they start from April, they end in March, because usually what happens is the matriculation examinations in Pakistan are usually around mid-end March, early April. So that's how generally the time period is. So for example, if I'm operating in Pakistan and if I want that my educational or my business sector in which I'm operating, 31st March suits me to be a right tax period, because my financial year ends on 31st March and it becomes very difficult for me to perform the tax computation and then submit to tax authorities. So I would prefer to go to the tax authorities and have my tax year changed. I would request them that you can change my tax year. So basically what happens is any company, any individual, any person can have a different tax year. For that you'll have to apply to FBR, and you'll have to apply to FBR with your reasons that why exactly do you want to change this. So you're going to apply with the reasons, and if FBR considers it to be an appropriate reason, they're going to adopt the change. So basically what happens is the special tax year is any period other than July to June tax year. Now, for example, how do we name a special tax year? Example is that there is a company which has applied for a tax period of 1st April till 31st March. Now, for example, the first time that we are talking about is 1st April 2018 till 31st March 2019. So how exactly am I going to name this tax year? Should it be tax year 2018? Should it be tax year 2019? Should it be tax year 2020? So remember, uh, the name of a special tax year. The name of a special tax year will be name of normal tax year in which it ends. Like for example, in this specific case, if it's ending on 31st March 19, so it's ending in a normal tax year of 2019. So what we are going to do is that we are going to name it a special tax year 2019. Now let's move a bit further. Similarly, if I would have had a tax year of, let's say, 1st August 2018 till 1st August 2018 till 31st July 2019, if I would have had this tax year, then I would have actually named this specific tax year as tax year 2020. Why? Because the date 31st July 2019 actually falls in a tax year 2020, falls in normal tax year of 2020. So the first concept that you need to understand is how do we actually name a specific tax year? So the normal tax year is July to June, and the special tax year is any period other than normal tax year. And how exactly are you going to name the special tax year? So the name of the special tax year is going to be the name of the normal tax year in which that special tax year ends. The name of that tax year in which this special tax year ends. Okay, anyone has any questions till now? Anyone has any questions till now? Okay, perfect. Now, let's move a bit forward. Now, what exactly is this transitional tax here? So I'm going to talk about the concept of the transitional tax here. So I'll have to add a few things into it. Please hold on for a second. Some error and it was closed down. Okay, anyways, unfortunately, I've lost what was written in it. But anyways, let's come back to it. So when we talk about the concept of transitional tax here, so what do we mean by this? Um, when we talk about the concept of transitional tax here, the transitional tax year is the period between the end of normal tax year, and the start of a special tax year. Like for example, take an example that you had obviously a normal tax year of 30th June 2019. Now you'd apply to the tax authority for a special tax year, and the special tax year that you've applied for is, let's say, you want your tax year to be 1st August 19 till 31st July 2020. So basically, the time period which is between the 30th June 2019 till 1st August 2019, this time period is going to be termed as your transitional tax year. What is going to be termed as transitional tax year? So when we talk about the word transitional tax year is the time period between the end of the normal tax year and the start of the special tax year. So it actually happens only once when we have a change in the tax period. Otherwise, it does not arise. So the transitional tax year does not arise every year. It only arises when you have a change in the tax year. Okay, so that actually is the conclusion of one of the basic concepts, which is the concept of the tax year, So we have discussed the concept of tax year. That is what we have done. Now let's move a bit forward. So here are a few examples pertaining to the tax year. What I would want to do is that I would appreciate if you people can attempt these examples, and you write down the relevant tax period. Yes, you can apply from a special tax year to normal tax year. You need to write to the commissioner, and you need to seek commissioner's permission. So once the commissioner gives you permission, you can move towards the normal tax year, because you should have reasons that why do you want to switch. Anyways, I would appreciate that if you people can attempt this example. I'm going to give you 3 to 4 minutes. I'm going to give you 3 minutes. You need to attempt this in order to decide that what exactly is the relevant tax year it refers to. Yes, Mohammed Amin, the difference between the normal tax year, the end of the normal tax year, and the start of the special tax year is a transitional tax year. Similarly, if you move the other way around, which is from special to normal, that is also going to be called a transitional tax year. Okay, now, so let's just start discussing. The first one is because it ends in August 2018. So August 2018 actually falls in a normal tax year 2019. So this is tax year 2019. Then we have got December 2018. This also falls in normal tax year 2019. This is obviously tax year 2019. This is also tax year 2019, and this is also tax year 2019. It's just that this is the normal tax year, and the rest of all of them are the special tax year. Now, anyone has any questions with relation to this? Anyone has any questions? Okay, so the answer to all of them is the tax year 2019. It's just that one of them is a special tax year, and the other one of them are all normal tax years. Now let's move a bit forward and let's talk about the other concept. So when we talk about the other concept in the Pakistani taxation law, so the next concept is basically the concept of heads of income. So when I talk about the heads of income, so let's just start discussing that basically whatever income that you earn is usually classified into under these five heads. And what are these five heads? That includes the income from salary, that includes the income from property, income from business, capital gains, and lastly, income from other sources. So whenever we talk about the heads of income, so whatever income that you generate, these income are usually classified into these five heads, which is salary, property, business, capital gains, and other sources. Now let's just start discussing about it. We are going to discuss about all of them in detail also, but generally salary, all of you know that the income that comes on from the employment, that is considered to be salary income. The income that comes on from the employment is considered to be salary income. The second one of them is called a property income. So property income actually refers to the rental income. The property income actually refers to the rental income. So whatever rental income that you earn, that comes from that is classified under the head income from property. The third one of them is termed as income from business. Now, when I talk about the income from business, so the business could actually be a trading business, could be a manufacturing business. There's also something which is termed as a speculation business. So we are going to be discussing while we'll be attempting on our second day tomorrow. We'll be discussing about the speculation business also. So we've got income from business. That's the second thing that's there. Then you've got capital gains. And what exactly do you mean by capital gains? Like whenever you dispose of the capital assets. So whatever the gain or whatever the loss that you have from the capital assets, that is all considered to be capital gains. That is all considered to be capital gains. Now, so basically when we talk about the capital assets, it's like investment in the shares, whatever shares that you buy, whether it's of a public company or whether it's of a private company, all of them are considered to be capital assets. You buy properties, the gain or loss on disposal of properties is also the capital gain, but we'll be discussing them in detail at a later stage. The last is called income from other sources. Now, what is this other source? So it's basically the residual head. Now, what do we mean by residual head? It means that any income which does not fall under any other head is classified as income from other source. So what do we mean by income from other source? So income from other source is basically the income which does not fall under any other head is considered to be income from other sources. So that is how the income is classified under the various heads under the Pakistani tax rules. That is how it is. Now let's move a bit forward. So that's the second concept that we have discussed. The third concept is called the total income. Now what's a total income? So when I talk about the total income, The total income actually refers to the income under all heads of income. Now, what do we mean by income under all heads of income? So that's salary, business, property, capital gain, other source, all of those heads of income and exempt income. Like for example, in Pakistan, the agricultural income is exempt from tax. So the agriculture income is exempt from tax, or if there is any other income which is prescribed by the tax authorities, by the FBR to be exempt, that income is also going to be considered as an exempt income. So when we talk about total income, it includes income under all heads plus the exempt income. Let's move a bit forward. Let's discuss further. The next concept is called the taxable income. Now, it's very important when we talk about the concept of taxable income. So how do we establish the taxable income? We'll have to discuss them one by one. And there are actually comments to it also. Um, First of all, when you talk about the concept of taxable income, so the word taxable income um, actually refers to the income on which the tax will be imposed, the tax will be levied. So this amount is going to be subject to tax. The amount on which the tax will be levied is termed as taxable income. How do we establish this taxable income? Let's just start discussing. First of um, all of the income other than the exempt income, as we said, under all heads, which is salary, business, capital gain, property, and other source. First of all, you need to calculate the income other than the exempt under all of these heads. That's number one. The number two thing that you'll do, the number two thing that you'll do is that you will have some deductions. You will have some admissible deductions. You will have some deductible allowances. Now, what are those deductible allowances? So there are actually 1, 2, 3, 4, 5 deductions from your taxable income, from your total income before you reach the taxable income. Now, what are these various deductions? Let's just start discussing them one by one. The first deduction, the first deduction is called the zakat. Now, a very important concept. Practically, what happens is a lot of people, when they pay zakat, they don't pay to government of Pakistan. They don't pay. They say that if we want to pay zakat, we'll pay it on our own. How do we pay zakat? We would actually search out somebody. How do we pay zakat? We'll search out somebody within our relatives who is eligible to obtain zakat income. So we would probably give zakat to him. Or similarly, we would look out for families, or we would look out for workers working with us, and we'll probably spend our zakat onto those people. Now, so the government of Pakistan, what it does is that the FBR, it says that if you pay zakat to XYZ person and you don't get any receipt of zakat, if you pay to any unregistered organization, like you're paying to individuals, so to us, that is not your zakat payment. Your zakat payment is what it's important that the government says that when you pay zakat, so it has to be paid under the zakat and Ushur ordinance. It has to be paid under zakat and Ushur ordinance. Now, when we talk about zakat and Ushur ordinance, so what happens is that you have to pay to registered organizations, like for example, AD Foundation, Aga Khan, at the same time Shaukat Khana Memorial Hospital, LRBD, Ceylani Welfare, Chipa Ambulance, Aman Foundation. These are the registered organizations to whom you actually pay your zakat to. If you pay zakat to these organizations, you get a receipt. Such zakat is deductible here. Such zakat is deductible here. But the zakat that we pay on our own, the zakat that we pay to people whom we know, because we don't trust any organization for paying zakat, such zakat is not going to be deductible here. So it has to be very important that it has to be zakat paid under the zakat and Ushur ordinance. Then you can actually deduct it while computing your taxable income. Now, a very important point relating to it is that, for example, your total income was, let's say, 1 million, and you paid a zakat of 2 million. So basically, you have got a 1 million loss over here. Now, this loss cannot be carried forward. If you have paid zakat more than what you have earned in the current year, then you cannot carry forward the excess unadjusted zakat. That excess unadjusted zakat cannot be carried forward. whatever needs to be adjusted, it needs to be adjusted in the current period only. That's the number one concept with respect to deduction, with respect to zakat. Now, there is a small concept that I need to explain to you people, which is the concept of profit on debt. Well, um, when we talk about the profit on debt actually means interest. The profit on debt actually means interest. When we talk about profit on debt, it actually means interest. So, if you get interest income from any bank, if any bank pays you interest or any non-financial institution pays you interest, so what actually happens is that usually a zakat is deducted on that interest. So what happens is that such zakat reduces your interest income but is not deductible here. So the zakat which is deductible here is other than zakat deducted on interest income. So the zakat that is deductible is other than the zakat deductible on interest income, and I've discussed this point that it cannot be carried forward. Okay, Imran Tariq, you're asking for a namaz break. Um, uh, Problem is that the plan that I've been given is that I have to take a break at 9:30 p.m. So what I would do is that we will have a discussion tomorrow that we take an early break, but otherwise it was planned that the break is going to be at the mid session. So and I can understand it's an Isha prayer. So obviously you would not get Jamaat, but it can be delayed a bit. But I'll take break today at 9:30. For tomorrow we can have an adjustment, and I'll take a break early at 8:45 till 9 p.m. so that you can go for Jamaat. Okay. Javadur Rahman, you are asking that the pro forma is called wealth statement. No, this is not called wealth statement. Wealth statement is something different. We'll discuss wealth statement later on. Okay. The next situation is the workers' welfare fund and the workers' participation fund. So what happens is you would hear from anyone working in the industry, they would say we have paid WWF, we have paid WPPF. So what happens is all that you need to know with respect to WWF and WPPF is that the companies or the organizations, they have to pay a certain contributions towards worker welfare fund if they earn a certain income. So if you are a business individual or if you are a business personnel and you're running a business, and if you pay an amount toward workers welfare fund, that amount is deductible against your total income. That's number one. The second thing is called workers profit participation fund. It's only mentioned workers participation fund, but it's actually workers profit participation funds. It's usually payable by the companies. All that you need to know from the perspective of your syllabus is that this is something that's payable by the companies, and in case if there are any payment, then the payments are deductible for the taxation purposes from the total income or from the computation of the taxable income. The next situation is the deductible allowance for profit on debt. Now, it's a very important concept which we need to understand, the deductible allowance on profit on debt. Now, what exactly is the deductible allowance on profit on debt? So I'm going to discuss. First of all, if you talk about this deductible allowance on profit on debt, so you would understand this thing that a lot of people, they obtain loan to purchase a house or to construct a house. They take loan. Now, the loan can be obtained from various type of modes or methods. One of the modes or method is you go to a bank or a banking institution or etc. Something similar, the organizations which are authorized by the government to lend the money. So that's one of the ways of obtaining loan, that you can obtain the loan from the organizations which are authorized by the government. That's one way of doing it. Other ways that you can secure private loan from your friends, from your relatives, etc., etc. So this deduction is only applicable this deduction is only applicable in case if you obtain loan. In case if you obtain loan from, in case if you obtain loan from approved institutions. So in case if you obtain loan from approved institution, then this deduction is applicable. Like those which are allowed to lend the money, if you obtain money from them, then you are allowed to claim the deduction. Otherwise, you're not allowed to claim the deduction. So that's an important thing, number one. Okay, the number 2 point is that um, approved institution, then what happens is that the money is used for the construction of a house. Like if you obtain loan and you use that money for the purchase of a vehicle, for the purchase of some appliances, then you will not be allowed to claim this deduction. The deduction is only applicable in case you obtain the loan, like you obtain it from the HBFC, House Building Finance Corporation, or you obtain from under some government scheme whatsoever. If you obtain loan for the construction or the acquisition of a house, what happens is the deductible allowance allowed shall be the lower of. Shall be lower of. Shall not, there is an error. Shall be the lower of 50% of taxable income or 2 million rupees. The excess cannot be carried forward. Like for example, if your taxable income is, let's say, if your taxable income is 4 million, or if your taxable income is, let's say, 3.5 million. Your taxable income is 3.5 million. Now what happens is that if your taxable income is 3.5 million and the interest that you have paid is 2.2 million. So what happens is the limit to the claim is 50% of taxable income, which is 1.75, or 2 million. The lower amount is going to be 1.75. So all that you can deduct from the income is 1.75. So when we talk about, yes, so if we talk about this 3.5 minus 1.75, because what happens is that the deduction that you can claim, it's only going to be with respect to the loan obtained for the construction or the acquisition of the house. So the deduction is going to be up till the lower of 50% of the taxable income or 2 million rupees. A student is asking that is this loan includes also HBFC? Yes, it includes HBFC and other financial institutions also which provide loan, and if that loan is used for the housing purposes, you can claim the deduction. There's a student who is asking as this pro forma is similar to income tax return, where should the exempt income be shown, such as export of IT services abroad? Okay, Omar, what I am going to say is that when you actually have an income tax return, so income tax return, there is an exempt section in that income tax return, and under that exempt section there are specifically few specific incomes that are already mentioned, and there are specific sections which are already mentioned, and there is a blank section also. Just in case if there is anything which is not mentioned over there, there's a blank section you can write on your own also. So if you have export of IT services abroad, if it is not mentioned in the return, then you would write under the blank section of the exempt section of the income tax return. Bushra Siddiqui is asking, is this profit on debt? Yes, this is profit on debt. Profit on debt is interest. Muhammad Adnan Salim, you are asking that what is the use of interest in your example? The use of interest in my example is that when we are calculating the taxable income, so the taxable income, when you compute taxable income, first thing that you do is that you compute income from salary, business, etc., all heads other than the exempt income, and then you deduct things out of it. Now, what are the things that are deductible? So one of the deductions that are allowed is the profit on debt. What is profit on debt? Profit on debt means interest. Now, what interest is allowed to be deducted? The interest that is allowed to be deducted is the interest. Is the interest that you pay on a house loan. Is the interest that you pay on a house loan. And the house loan should have been obtained from the scheduled bank or a non-banking financial institution or other institutions authorized by the government of Pakistan. So you can only claim it, otherwise you cannot claim it. So the example that I've given is that I've said that there is a limit to what you can claim, and the limit is the lower of 50% of the taxable income or 2 million rupees. 50% of taxable income or 2 million rupees. Is everybody okay till now? So I took this example where I said that taxable income is 3.5 million. The interest that I have paid is 2.2 million, whereas the 50% of taxable income is 1.75, 2 million. So whatever the lower amount, that's 1.75. So I can claim a deduction of 1.75. Okay, thank you. Now, the last thing is that the deductible allowances for the education expenses. Now, the deductible allowances for education expenses, let's start discussing about it. What happens is, when we talk about the educational expenses, let's try to understand this concept. A student studying at a school or a college, his fee would be paid by his parents or his guardian. His fee would be paid by his parents or his guardian. So, the parents of the kid are allowed to claim the deductions of the educational expenses that they have paid with respect to their kid. Now, how can they claim the deduction? How they can claim the deduction? Let's just start discussing about it. The law specifically says the deduction shall be in respect of the tuition fee only. That means if you are paying examination fee, that's not deduction. That's not deductible. Okay, Anil Thonte, you are asking that can you define guardian and its definition in the ordinance? Well, the definition of guardian is not there in the ordinance. But if there is something that is not there in the ordinance, then what we do is that we take the dictionary and we use the dictionary meaning of that. So somebody usually what happens is who is taking care of you, who is bearing your expenses, that is considered to be a guardian. That is how it is. But anyways, now let's see. So the deduction of the education expense, let's talk. Deduction shall be in respect of the tuition fee only. If you pay examination fee, if you pay admission fees, that's not deductible. If you pay transportation fee, now what happens is what sort of transportation fee? Because a lot of students, they go by school vans. So if you pay a school van fee, that is not deductible. The only fee that is deductible is the tuition fee. A bit forward now. And you can only claim deduction with respect to your tuition fee if your taxable income is less than 1.5 million. It should be less than 1.5 million. 1.5 million rupees. It should be less than 1.5 million rupees. Now, when we talk about less than 1.5 million rupees, so let's try to understand this. Even if your income is 1.5 million rupees, you cannot claim deduction because it says less than 1.5 million. So the word less than has significance because whatever written in the law, every single word has a significance. So it has to be less than 1.5 million rupees. Number one. So if you have paid for educational expenses, you can claim deduction with respect to the tuition fee, and the deduction with respect to the tuition fee is going to be the deduction with respect to the tuition fee will only be allowed to be claimed if your total taxable income is less than 1.5 million. If it is equal to 1.5 million, you cannot claim. If it is less than, you can claim. Now what next is that? The deductible allowance will be lower off. Lower of what? Lower of these. 5% of total tuition fee paid by the individual in the year, or 25% of your taxable income for the year, or an amount computed by multiplying 60,000 with the number of children of the individual. Now, what exactly do you mean by all this? So let's try to understand. So if I take an example, is that your taxable income is, let's say, your taxable income is 1.2 million, and the total tuition fee that you have paid during the current year is 900,000, and the number of kids that you have is 4. So how much of the educational expense can you claim? So you'll have to apply these limits. Now, what are these limits that are going to be applicable? The number one thing is it's going to be 5% of the tuition fee paid, which is 900,000. So this actually gives you 45,000. The second point is going to be it's 25% of your taxable income. So it's going to be 300,000. The third thing is it's going to be 4 into 60,000 gives you 240,000. So what is the lower amount? The lower amount is this 45,000. So the amount of deduction that you can claim with respect to your kid's tuition fee is going to be 240,000 only. Sorry, it's going to be 45,000 only. Is it okay? Is it clear? Okay, so when we talk about the educational expenses, this is how we claim the deduction, which is actually the lower of 5% of the total tuition fee, 25% of taxable income, and an amount computed by multiplying so and so. Okay, Anil is saying, yes, we do understand, but it's not fair. To be honest, it's not fair at all, because you're only allowed a very minute deduction. You're not even allowed big deduction. And only those people who have an income of less than 1.5 million are allowed this. And 1.5 million nowadays would actually mean that it's around 125,000 a month. So basically, if you go to schooling and the educational institutions, so I do understand that any good educational institution would be charging around minimum at the normal school college level, would be charging around at least 10-12,000 a month. That's a minimum that you would be paying. Yes, 15,000 a month. And if you've got 3-4 kids, so you end up paying around a handsome amount. Anyways, we are not we are not here to discuss if it's fair or not. But yes, that's how the rule is. That's how the law is. So we should know that how to apply and how to claim the deductions. And there is a student, Imad, who is asking that is this only applicable to individuals? Yes, only to individuals. And there's also somebody is asking that are there any approved institution for DA for the deductible allowances for this? They have to be registered. You have to show the NTN of the school and the college where your students are studying, where your kids are studying. So you have to show the education. You have to demonstrate to the government that they have an NTN and they hold a valid NTN. Anyways, so basically that's how the taxable income is computed, that the total income, and then you claim the deductions, which is zakat, WWF, WPPF, and the profit on debt, and the educational expenses. Is it okay to everybody? Yes, Mohammad Adnan, obviously, when it comes to the time that the Finance Act comes in and the government asks us for the suggestions, so we can give the proposals to the Finance Act that these are the changes that could be implemented with respect to FBR. Anyways, let's move a bit forward and let's start discussing about another concept which is called the definition of a person. Because whenever we talk about uh, the tax rules, the important thing is, okay, just wait a second. Let's start discussing further. Just give me a minute and I'll continue. Okay, there's a student who's asking, Jawadur Rahman asking that, will you be teaching company also? Yes, I'll be teaching you company also. Don't worry. It's going to be. Let me proceed with the time, and inshallah I'll cover up everything. Muhammad Amin is asking that I'm doing CMA from ICMAP. So will my fee be deductible? So yes, you can claim deduction. You can apply to the tax authority for the deductions. There is Imad Ahmad. Yes, Imad, this is the first webinar on the Pakistani. First, not first, it's the first ever webinar on the Pakistani taxation conducted by ACCA for the paper taxation. And the second thing is, this is the first day today. Anyways, let's move forward. So when we talk about the taxability, so important thing is there is a concept of person. Now, what do you mean by person? When the government imposes tax, whom did they impose tax? When the government imposes tax, whom did they impose tax upon? So they impose tax upon a person. Now, who is a person? So as per the definition of the law, the person, it could be an individual. The person could be an company, could be an association of persons. Now, association of persons, generally, what we understand the word association of person is about the concept of partnership. So the partnership is considered to be the association of person. Incorporated, formed, organized, or established in Pakistan or elsewhere. So it's not necessary that it's incorporated in Pakistan. If a partnership is registered outside Pakistan, it can also be considered as a person for Pakistan. Then there is a federal government, which is, let's say, uh, government of Pakistan. Then the foreign government, let's say US government, a political subdivision of a foreign government. Political subdivision of a foreign government. So you have got various organizations which operate as part of the foreign government or the public international organizations like IMF or etc. etc. Now, so the word person, now it's important because what happens is that we calculate the tax liability of the person. So who is a person? An individual could be a person, an AOP could be a person, a company could be a person, a government could be a person. These are all considered to be a person. There's another concept which is called the concept of a taxpayer. When we talk about the concept of taxpayer, So who is a taxpayer? Now, very important point is, from the perspective of the definition of the taxpayer, a taxpayer is not necessarily somebody who is paying tax. I'm repeating it again. A taxpayer is not necessarily somebody who is paying tax. Why? Because there is a definition of taxpayer. Like, for example, it says any person who derives an amount chargeable to tax under Income Tax Ordinance 2001. So if you have got any income which is subject to tax, you will be considered as a taxpayer. Even if you are not paying tax to the government, even if you are not submitting your return, even if you are not filing your return, still you will be considered as a taxpayer. Maybe a representative of a person who derives an amount chargeable to tax. Now let's try to understand this concept. For example, your father or your mother dies, they pass away. So what happens is, when they die, they are called deceased person. What are they called? Deceased person. Now, the law, it says that if somebody is deceased, then their legal representative would actually be charged tax, will have to pay tax on the income of the deceased. So for example, if any of your relative dies, close relative dies, and you are one of the beneficiaries of their inherited wealth, so what happens is that you could be one of the representatives of them. And even if you're not earning any taxable income, but since you become a representative of that person, then what happens is you will also be considered as a taxpayer as per the law. Next situation, was required to collect or deduct tax under Part 5 of Chapter 10 and so on and so on. There's a concept of withholding tax in Pakistan. Now, what is this withholding tax? So when I talk about the concept of withholding tax, the withholding tax actually refers to the situation. When we talk about the concept of withholding tax, the withholding tax is like, you are making payments. At times you have to deduct payment. You have to deduct tax from the payments that you make to various vendors, the suppliers, the employees, etc., etc., etc. So even if you are not earning any income, but you are acting as a withholding agent, then still you will be considered as a taxpayer. The next situation is, the one who is required to furnish return of income or pay tax under the ordinance. Now, the important concept is required to furnish a return of income or pay tax under the ordinance. Now, so there is actually, we'll discuss it at a later stage, that there are people who have to file the tax return. Even if they are not earning income, they have to file the tax return. So if you are required to file a tax return, if you are required to furnish a tax return, then what happens is that you will be considered as a taxpayer. You'll be considered as a taxpayer. Okay. Is it fine to everybody? Okay. Somebody is asking about the second point. So, for example, if somebody dies and you are one of the beneficiaries of their inheritance, then what would happen is you would be considered as a legal representative. Even though you're not earning any income, but what happens is you will still be called a taxpayer, because you'll have to pay tax on their behalf. Now let's move a bit forward. Let's start discussing about the next concept. And the next concept is the residential status and taxability. Now it's a very important concept with respect to the tax laws, which is the concept of resident. Now what is a resident taxpayer? Let's start discussing about it. That what do we mean by resident taxpayer and what is the concept of residential status and the taxability. So basically what happens is when we talk about the word resident person, the resident person does not mean one who is living in Pakistan. Resident person does not mean that one who is a Pakistani national. The word, being a Pakistani national is something else, and being resident in Pakistan for tax purposes is something else. So I'm repeating it again. That being a Pakistani national is something else. Living in Pakistan is something else, and being resident for tax purposes is something else. So we'll be discussing about the concept of residential status in Pakistan, but for the time being, let's try to understand that why exactly are we discussing it. So the first thing is, if somebody who is resident in Pakistan, he is liable to pay tax on his worldwide income in Pakistan. That is any local source income and any foreign source income, he has to pay tax in Pakistan. Now, what's next? The next situation is non-resident person. Somebody who is non-resident for the purposes of tax, they're only liable to pay tax on Pakistan source income in Pakistan. They're only liable to pay tax on Pakistan source income in Pakistan. So one thing is resident person, worldwide income, you have to pay tax. Non-resident person, you only have to pay tax on Pakistan source income. Now let's move a bit forward. Let's start discussing further. How do we establish that if somebody is resident or not? So as per the law, this law is going to change under the Finance Act 2019 because the number of day count in Finance Act 2019 has actually changed. So who is a resident individual? So it says resident individual is somebody who is present in Pakistan for a period of or periods amounting in aggregate to 183 days or more in a tax year. Very important point. What is a very important point? That you have to be in Pakistan for 183 days or more in a tax year. Remember, it's not about the calendar year, it's about a tax year. It's not about calendar year, it's about a tax year. So if in any tax year you are in Pakistan for 183 or more days, you are going to be considered as resident. Whatever nationality you belong to, if you are in Pakistan for a period of 183 days or more in a tax year, you are a resident individual. Now what next? The next situation is that do we need to be in Pakistan for a continuous period of 183 days? The answer is no. Even if you go out of Pakistan, you come back to Pakistan, you go out of Pakistan, you come back to Pakistan, the 183 days are going to be considered an aggregate in a tax year. So it has to be in aggregate in a tax year. So that's number one. Number two, if there's somebody who's an employee or official of the federal government or a provincial government and who's posted abroad in a tax year, you're posted abroad in a tax year, posted in some other country as a government employee, as a government servant, let's say for a period of 2 years. So despite the fact that you are not present in Pakistan for 183 days, you'll still be considered as a resident taxpayer. That means you'll have to pay tax on your worldwide income in Pakistan during your period of stay abroad also. Now what next is there? A very important point is that how do we count these 183 days? How do we count these 183 days? So you need to understand that what is counted as a day of presence in Pakistan. So I'm repeating it again. You need to understand what is counted as a day of presence in Pakistan. Now let's just start discussing about it. It says either the full day or a part of the day. Even if you are present in the country for 1 minute, it will be counted as a day. Even if you are present in a country for a minute, it will be counted in a day. Now what happens is, when you come to any country, when you go to any country, at the immigration desk, you have a passport in hand. So the immigration authorities, they see the time period, that what is the current time, so they accordingly put the date. Like for example, you come to Pakistan at 11:58 p.m. and the immigration authorities insert the date 26th August. Although in 2 minutes time it's going to be 27th of August, but the immigration authorities are going to put 26th August. So 26th August will also be counted as your day of presence in Pakistan, because your passport says that you were present in Pakistan on that specific day. That's number 1 point. Now what's the number 2 point? Number 2 point is that following days are also counted where an individual is wholly or partly present in Pakistan. Now what happens is, a day of public holiday. You are present in Pakistan on 14th of August. You're present in Pakistan on a Eid day. All of them is going to be considered as a day of presence in Pakistan. A day of leave. You come to Pakistan, you fall sick. You fall sick in the hospital, you'll be considered as being in Pakistan. You obtain leave, you'll be considered as being in Pakistan. It said the day that individual's activity in Pakistan is interrupted because of a strike, lockout, or delay in receipt of supplies, etc., etc. You are present, although you are not able to work because of the circumstances, but still, you'll be considered as present in Pakistan. Holidays spent by individual in Pakistan before, during, or after any activity in Pakistan. So what happens is, at times when we go to a country, let's say for training, or let's say for meeting or whatsoever, so what we do is that we take another day, we put we actually keep a day or two in hand, and we spend the time there in the country alongside. So basically what happens is, a holiday is spent by the individual in Pakistan before, during, after any activity will also be counted. Now what is important is, what is not counted is the day of transit. If you are, let's say, you are traveling from Dubai to China, and you stay in Pakistan in between, and stay in Pakistan for transit. So if you are here in Pakistan only for the purposes of transit, then your stay in Pakistan for the transit purpose will not be counted as your stay of as being present in Pakistan. So that's how you establish the residential status. Is everyone okay with this? Anyone has any question with respect to resident individual? That how do we establish resident individual? If you're okay, then I can move forward. Okay. So let's move a bit forward, and let's just start discussing about the next concept, which is the concept of resident company. So when we talk about the resident company, so what makes a company to be resident? First of all, a resident company has to be incorporated or formed under any law enforced in Pakistan. That's number 1 point. The second thing is that the control and management is situated wholly in Pakistan at any time in the year. Like for example, you had a head office in Pakistan during the tax year for a 1 month period only. The next month you move your complete head office operations out of Pakistan. So you will not be, you'll be still be considered as a resident in Pakistan. But for example, if you have got only part of the affairs or part of the management in Pakistan, then you'll not be considered as resident. In order to be resident company, you need to have you need to have your affairs situated in Pakistan wholly during any time of the tax year. It's not necessary that you have your affairs in Pakistan for the whole year, but for any time in the tax year, it has to be in Pakistan. Or you are a provincial government or a local government in Pakistan, then you'll be still considered as a resident. Lastly, we have the concept of resident AOP. Now, what exactly do you mean by resident AOP? So, the resident AOP is an AOP whose management and affairs are situated in Pakistan wholly or partly at any time in the year. Now, try to understand the difference between resident AOP and resident company. When we talk about the resident company, so the resident company, the affairs are situated. When we talk about the resident company, for the resident company, the affairs are situated wholly in Pakistan at any time of the year. But for an AOP, even if it's not wholly, even if it's partly, it's gonna work out. Even if it's not wholly, even if it's partly, it's gonna work out. Is everyone okay with this? Is everyone okay with this? Now, important is you need to be able to classify every person, whether an individual or an AOP or a company, as resident or non-resident. Because when you have the residential status, then you can decide what income are they going to be paying tax upon. Okay, is it okay to everybody? Yeah, anyone has any questions? Yeah, anyone has any questions, please? Okay, so that marks the conclusion of this specific slide. What I'm actually going to do now is that I'm going to take a break, and the break is going to be for 15 minutes. It's going to be break till 9:45 p.m. So we shall now commence at 9:45 p.m. And when we get back from the break, the topic that we shall be starting is the income from salary. So stay tuned for that. Income from salary is our next topic. welcome back. Okay, so we are now going to move on to the next area of the syllabus, and the next area of the syllabus is basically we are going to start discussing the first head of income, which is called income from salary. Now let's just start discussing about income from salary. That what exactly do you mean by income from salary? So let's just study the definition of the income from salary. What do we mean by this? It says salary means any amount. Salary means any amount received by an employee from an employment, whether of a revenue or a capital nature. Now, you need to focus on the definition of the word salary, or you need to focus on that what exactly are the components of this salary. Now, the first thing it says is that salary means any amount received. Now, what exactly do you mean by the word received? Now, the dictionary meaning of the word received is simply to have received. But when it comes to the tax, the word the word received under the tax rules have got a different meaning. So when it says salary means any amount received, so you need to understand what is the definition of the word received as per the tax rules. By an employee, who is an employee, we need to understand. From any employment, what's an employment, we need to understand. Whether of a revenue or a capital nature. Now let's see. If you are receiving cash, that's a revenue nature item. At times what happens is you receive other benefits, that's also a revenue nature item. At times you receive things which are of capital nature, like for example you are receiving property from your employer, so then that property is going to be considered as a capital nature item. So basically what happens is when we talk about the concept of capital or revenue nature, so you can receive the things from your employer either in the form of cash or benefits or perquisites, etc., or even in the capital nature form also. Now let's move a bit forward. So if I talk about these key definitions, the first thing is it says employee means. Now what do you mean by employee? It says employee means any individual engaged in employment. Now, so what exactly do you mean by employment? So the employment, it says employment includes. Now, whenever we talk about the law, there are actually two types of definition. One of them is called inclusive definition and the other one of them is called exclusive definition. Now, what exactly do you mean by inclusive definition? Like it says employment includes. So this is an inclusive definition. What do you mean by this inclusive definition? This inclusive definition actually means that whatever that the dictionary says employment, so employment under the tax law also has that meaning and it also includes these three things. So when it says employment includes, this means whatever the meaning of employment as per the dictionary, that meaning prevails. But in addition to this, this is also included in the employment definition. Now, what is it? What is included? It says a directorship or any other office involved in the management of a company. So if you are a director or you are holding any other management office, chief operating officer, etc., you're all considered to be an employee. A positioning entitling the holder to a fixed or a ascertainable remuneration. A lot of companies, what they do is that when their employees retire, they hire them as contractual. They hire them as a contractor or a service provider. Those employees, they continue to work like an employee. It's just that their legal status within the company is of a contractor, is of a service provider, and not of an employee. So you may have such a legal status, but the status as per the taxation rule is going to be, you will still be considered under the employment. Why? Because when we talk about the word employment, it says employment includes a person entitling the holder to a fixed or a certain remuneration. And lastly, it says or holding or acting in any public office. So any governmental person is considered to be an employee. Any governmental person is considered to be an employee. Okay, the next situation is, so we have actually understood this thing. The first thing is that what is employment? So first of all, salary means any amount received by an employee from an employment. So what is an employee? The one who's engaged in employment. What is employment? It includes whatever the employment means as per the as per the dictionary, that is included. And in addition to this, these three things are also included. Now, somebody is asking that what exactly do you mean by ascertainable? Is it judgmental? Now, ascertainable is when you are prescribing certain rule that you will work 5 hours every day and will pay you, let's say, 2000 rupees per hour for every day. So that's ascertainable. Okay, Muhammad Amin has a question. The question asked by Muhammad Amin is that if someone has a fixed remuneration and the contract was signed as individual consultant service provider, will it fall under employment? Yes. Because what happens is you are signing a contract with them as a contractor, but they're not contractor. They're working like an employee. They're working like an employee. Well, self-employment cannot be considered as employment. Self-employment is business. If you are self-employed, it's a business. You cannot claim your salary as an expense unless and until you are a company. Okay, so we have discussed two of the definitions. One of them is the employee and the other one of them is employment. Now, a very important definition is about the receipt of income. Now, remember one thing. Every head of income, Mohammed Amin, just wait, I'll discuss the tax rates. Now, every income, you need to understand the concept for every income, whether it is taxable on a cash basis or it is taxable on an accrual basis, or how is it taxable. So just like cash or accrual basis, there is also a concept called receipt basis. There's also a concept called receipt basis. Now, what exactly do you mean by receipt basis? Let's try to understand the concept of receipt basis. If I talk about the concept of receipt basis, let's try to understand. When we talk about the receipt basis, it says that receipt of income means a person shall be treated to have received an amount, benefit, or perquisite if it is actually received by the person. Number two, applied on behalf. It's or applied on behalf of the person at the instruction of person, or made available to the person. Now these are three things that actually constitute a receipt. Now what do you mean by this? The first thing is it says actually received. So if you have actually received the cash, that means it's done, you've received it. Or applied on behalf of a person. Like for example, the deduction of provident fund from your salary. What happens is the company deducts provident fund from your salary and transfers into the provident fund. Now, as per the law, although the deduction that is made from the provident fund is not been made available to you, I mean it's not been given to you, but it's been deducted and it's actually being given to the provident fund. So it's applied on behalf of you. So if some income is applied on behalf of you or somewhere, it's considered to be have been received by you. Another example. For example, you have obtained a property in Bahria Town and you have to pay installments to Bahria Town. So what you do is that you instruct your company that you can pay my remaining salary to me at a later date, but I would want that around 15,000 rupees every month be paid on the 28th of the month to Bahria Town. So I would appreciate if you can make a payment of 15,000 to Bahria Town on my behalf every 28th of the month. So if the company makes a payment on behalf of you, so that means you would that actually means that you have actually received that amount. Why? Because it's applied on behalf of you. The third thing is made available to the person. You're you're working with a company, your check is ready, you're not collecting it. Even if you're not collecting it, even if you're not depositing it to the bank, as per the law, you have actually received it and you'll have to pay the tax onto it. So when we talk about the word salary, it says the salary means the amount received by an employee from any employment, whether of a revenue or a capital nature. So received actually means is actually received or applied on behalf of you or is made available to you by an employee from any employment. Now let's move forward and start discussing further. So I would like to explain to you this concept that generally what happens is the companies they pay you salary in arrears. Like if the month of August 2019 is ending, so you'll get your salary in September 2019. If the month of August 2019 is ending, you'll get your salary in September 2019. So what happens is, similarly, if you are working, let's say it's your first year as employee, and you're working in employment from 1st July 2018 till 30th June 2019. Your monthly salary was, let's say, 100,000, and you are paid salary on the 5th of following month. So what is gonna be your taxable income for the tax year 2019? It's going to be 100,000 multiplied by 11. So you'll pay tax on 1.1 million. Now why is that so? Because what happens is that your salary is paid on the 5th of the following month. So in the current tax year, you are actually being paid salary for the 11 months, and the 12th month salary is going to be made available in the next year. Now, let's talk about the second year. Your salary is now increased to 110,000. So if you want to calculate your income for the second year, your income for the second year is going to be like this. 110,000 into 11 plus 100,000 into 1. Now you would say why? The reason behind that is in the second year my salary has increased to 110,000. So if my salary has increased to 110,000, that means I'll be getting 110,000 for the 11 months, and for another month I'll be getting 100,000 pertaining to the previous tax year. So when we talk about the salary to be taxable on receipt basis, it actually means that it's actually received by you or is applied on behalf of you. Applied on behalf of you means that the company has paid your salary to somebody else as per your instructions. Or lastly, it's made available to you. Like for example, the check is ready, but you're not collecting it. You're not collecting it, it's your fault. It's not the employer's fault. It will be considered as taxable. Now, Javadur Rahman has a question. It says there is another complication. What if we receive salary of 3 months in advance? What will be the tax implications of it? Okay, the tax implications of it is going to be there is something that I'll explain to you a bit later. But as of now, what I've explained, and on the basis of what I've explained, you will have to pay tax on 15 months salary in the current year. Why? Because you've actually received 15 months salary, 12 months plus 3 months advance. So finally, the employment, the definition salary income, it says it means any amount received by an employee from any employment, whether of a revenue or a capital nature. Okay, anyone else has any question till now? Okay, let's move forward. So salary is taxable on receipt basis. Now, there's something it says circumstances due basis. So there are a few things. Let's try to understand this. There is section 110 of the income tax ordinance. It says salary paid by private companies. It says commissioner might include salary of an earlier tax year in the calculation of income for that earlier year if in his opinion the salary was deferred. Now let's try to understand this. I think you people have received the handouts, and in those handouts you will find that there is something which is called tax rate, which is also available in those handouts. Now if I talk about those tax rate, so I'm going to explain to you a few things with respect to those tax rates. Let's have a look at these tax rates. These are the tax rates as per Finance Act 2018. Those of you attending the webinar right now, and if you are a salaried employee, you would be missing this tax rate, because this was such a good tax slab for you to have, because nowadays you have to pay excessive amount of tax based on the amendments in the Finance Act 2019. But in the Finance Act 2018, this is what was the tax rate of the salary was. Now let's see. Where the taxable income exceeds 800,000 but does not exceed 1.2 million, you have to pay 2,000 rupees of tax. The next, it says where taxable income exceeds 1.2 but does not exceed 2.5, you have to pay 5% of the amount exceeding this. This sort of tax slab is termed as progressive rate of taxation, because as your income keeps on increasing, the tax keeps on increasing. As your income keeps on increasing, the tax keeps on increasing. Now let's talk. So if I talk about this, so what happens is that if your income increases, the tax rate also increases. It can go up to 25% also, where the income exceeds 8 million. Now let's try to understand something. You are working in a private company, and you're about to receive a bonus or something else. And if you receive a bonus, your salary would become 8 million plus, and your tax rate, which was 20%, would now go up to 25%. You discuss with your employer and you tell your employer that, look, this is going to be a detrimental thing for me because this bonus is not an every year's thing. It's a one-off item. So how about if you can give me a favor? Now, what sort of favor has your employer given to you? The employer has given to you the favor is that he has deferred the payment of the bonus. He's not going to be paying you bonus in the current year, and he's going to be paying you the bonus in the next year, so that he's going to be paying the bonus to you in the next year so that you can pay lesser amount of tax in the current year, and then you can pay tax in the next year where your income would be normalized and etc etc. So it says if the commissioner has a reason to believe that there has been a deliberate deferment of the salary. So what he can do is that he can actually force you to have your bonus taxed in the earlier tax year and pay at a higher rate of tax. That is, although you are submitting your tax return for tax year 2019 and you are actually submitting to the commissioner that I have received an income of 7.5 million, and in tax year 2020 what you are doing is that you are showing the bonus of 2 million. So what the commissioner can do is that he has got the powers. He can say that no, this bonus does not pertain here, this should be added here, so you should have 9.5 million in tax year 2019. This is what the commissioner is going to say. So I'm repeating it again. So salary paid by private companies, if the commissioner has a reason to believe that the deferment is intentional, so what he can do is that he can actually have your income taxed in the earlier tax year if it pertains to the previous tax year. There is another concept which is the salary received in arrears. At times what happens is you may be working with a company like presently what is happening in steel mill is that the steel mill does not have the money to pay salaries. So there is a huge deferment or the delayed salary payments. Like even the salary is due for 9 months, 10 months, 12 months, 15 months. This is how the salary is actually due. Now, let's try to understand the concept. If the salary is received in arrears, I'm explaining this concept, let's try to understand. If the salary is received in arrears, like for example, in tax year 2019, I received salary for 6 months only, and in tax year 2020, I am receiving salary for 18 months, which is 12 months of 2020 and the 6 months of the previous year. So what will I do? So as per the law, I am actually allowed that I can apply to the commissioner and I can have my salary to be taxed in the relevant taxpayer. Like, because what happens is it's because of my employer deferring it. It's not because of me. It's because of my employer deferring it. It's because my employer did not have the relevant cash flows. My employer did not have the cash flows to actually cover up my cost. And he could not pay me salary in the previous month, previous tax year. So if he has paid me 18 months salary in the current tax year, why should I be at a disadvantage? Why should I be at a disadvantage of making that payment or making the extra payment in the next tax year? So if you want, if you have such a situation, you have an option that you can elect to be taxed on an arrear basis, that you can say that this additional 6 months which I have received in the current tax year, I would want this to be included in the taxable income for the previous tax year. Is it all okay till here? Yeah, is it all okay? Anyone has any question till now? Okay, let's move forward. Now, the next concept is what constitutes salary. So when I talk about what constitutes salary, so there are various 7-8 items which are mentioned here, and they are remuneration, allowances, perquisites, amounts in addition to the salary, post-employment benefits, tax paid by employer, employee share scheme, and reimbursement of personal expenditure. Now let's try to have a discussion pertaining to each and every item, that how are they included in the salary. Let's try to understand this. First of all, let's try to understand remuneration. Now, what is remuneration? Remuneration could be in the form of pay, could be in the form of wages. Usually pay refers to when you get a monthly amount. Wages is usually referring to a daily amount. So when I talk about the remuneration, one of them is either the pay or the wages. That is considered to be the remuneration. And then other remuneration including leave pay. So if you have got a policy in your company where you actually get a leave pay, like if you go on a leave, your salary did not get deduct, so that's a leave pay. Payment in lieu of leave. What is payment in lieu of leave is basically the other way around, leave encashment. It's also termed as leave encashment. Overtime payment, bonus, commission, fee, gratuity, working condition supplement. Now I'm going to discuss this number 5 and number 8. What is commission? You would look at employees of a bank, you would look at employees of sales department of any organization, or insurance agents, etc., etc. These are the people. What happens is, in addition to the salary, they get the commission also. Number 2, work condition supplements. For example, Angro has set up a business in Tharparkar, which Angro Coal Mining Company, Angro Thar Coal Mining Company. So if I talk about the Angro Thar Coal Mining Company, then what happens with the Angro Thar Coal Mining Company is that people who work in Tharparkar, these are very difficult conditions to go into Tharparkar, because you have to travel a long distance, and then what happens is that when you go there, what happens is it's very difficult to go there. So if somebody who's working there, they get an extra amount as a working condition supplement. So if you are getting working condition supplement, that working condition supplement is going to be also considered as part of your remuneration. So that's the first aspect of remuneration, and the first aspect of remuneration is the first aspect of salary is remuneration. Now the second thing is, okay, there's a question from somebody. Mohammed Amin, what do you want to know? Working condition supplement? Okay, working condition supplement is at times the company posts you into a situation, I mean, at a place where the working conditions are not very good. So in order to compensate you, they give you an extra amount as a compensation. That's called working condition supplement. Umar Said, you are asking a question that in reference to delayed salaries example, how will they withhold tax on salary withheld in the same year or later when the salaries are paid? Well, the tax cannot be withheld, because even the salaries are not paid. How can they withhold the tax? They don't have the salary to pay. How can they pay tax on them? So first of all, the withholding is going to be done when the salary will be paid, and the rate of withholding will depend upon how the employee elect to be taxed on the salary. Obviously, what would happen is that the employee would want to be elected to be taxed on an arrear basis, like as if they would want to be taxed as if they would have received the salary in the relevant tax period in which they were entitled to receive, but they did not receive because of the problems of the circumstances being faced by steel mill. So Like for example, if I had to receive some amount into tax year 2017, I did not receive. I had to receive in tax year 18, I did not receive. I had to receive in tax year 19, I did not receive. Now I receive everything in tax year 2020. So what I would actually do is that I would I would get the amount received in the current tax year to be taxed in three different tax year, like some amount in tax year 19, some in 18, some year 17, whatsoever is the relevant time period. I would get that amount taxed accordingly, and my employer would withhold the withholding tax accordingly. Okay, there's somebody who's asking that. So what is gratuity, CP fund, GP fund, etc. Okay, Jawad Rahman, just wait for a while. That's post-employment benefit. I'll discuss that in a while. Mohammed Amin, it says salary in areas will the employee need to apply from the commissioner? What happens is that you don't have to seek permission, you just have to inform the commissioner. That's how the tax law operates. So it's not you have to seek permission. You just have to tell the commissioner that I'm doing it. You just have to you have an option to go for it. So Mohammed Amin, it's the discretion of the employee himself. Yes, it's his discretion. Okay, the next situation is the allowances. Now, what do we mean by allowances? So, when you basically now the Pakistani tax law with respect to salaries has become very simple. Earlier, when there was income tax ordinance, when with the 1979, the tax law pertaining to the salary was very complex. Okay, I'm holding for a second. There's a student having a question. Yes, Imad, please go ahead, please. Okay, Imad, Imad is asking a question. Why is medical allowance not mentioned? Okay, so that's my mistake. Medical allowance should also have been mentioned here. I've missed out on that. Anyways, now let's see. So when we talk about the allowances, so I was discussing that the salary taxation has become very simple nowadays. It used to be very complex. And what the companies they used to do was they used to split the salary of the employee under the various heads to reduce the impact of taxation. Like the salary used to be split into the basic salary, cost of living allowance, medical allowance, house rent allowance, and entertainment and travel and conveyance and etc etc. And there used to be exemptions available on them. There used to be exemptions available on them. Now what had happened now is that what happened now is that the salary tax law has become very simple, and the simple concept is that if you are receiving amount from your employer, whether that is called salary, whether that is called remuneration, whether that is called allowance, everything is taxable. So whether you get the amount with respect to the cost of living, with respect to rent, with respect to utilities, education, whatsoever that you receive during the course of employment, that would be considered as your income from salary. Now, one important aspect is that it shall not include. What does it say? It shall not include any allowance solely expended in the performance of the employee's duty of employment. Now, I'm going to explain this concept. For example, you go on behalf of your company to Dubai. Your company gives you 500,000 for your expenditure in Dubai on a business trip. This entire 500,000 is going to be exempt. Why? Because you were being given these 500,000 to spend on the business trip. Now, a few students would have a question that what if I only spent 400,000 and I was left with 100,000 and the company told me to keep this 100,000 with myself and not to return to them. Will it be taxable then? The answer is no. It was given to you while you were going out performing the duty as an employee. So whatever amount that is received by you, even if you have not, even if you have not expended it completely, it's going to be exempt from tax. So all allowances are taxable unless they are being paid to you during the course of your employment for doing something pertaining to the business. The next is perquisites. What are perquisites? Perquisites are your non-cash benefits. The perquisites are your non-cash benefits. Now, if you want to understand that how the perquisites are taxed, so I'm going to explain to you a general rule that if there is a specific rule available for any perquisite that how is it going to be taxed, then that's okay. Otherwise, if there is no general rule available, then what happens is the perquisites are going to be taxed like this, that fair market value of any benefit less the benefit paid by the employee. For example, an employer gives you a property. The market value of the property was the property was 4 million and you were only required to pay 1 million. So what happens is 3 million is the benefit that your employer has given to you. So if 3 million is the benefit that your employer has given to you, then 3 million has to be included in your income from salary. 3 million has to be included in your income from salary. Next. Okay, the next aspect is basically the perquisites can be in the various form. And what are the various forms in which the perquisites can actually be? So if I talk about that, how the perquisite is going to go about. So it says motor vehicle, interest-free loan, rent-free accommodation, amount waived by employer, etc., etc. What I'll do is that I'll start discussing each one of them one by one. I'll start discussing each one of them one by one so that we can have an idea that how are these perquisites added to the income from salary, but you can understand the general rule. The general rule is that fair market value of any benefit less the amount paid by the employee. Less the amount paid by the employee. Now let's try to understand. First of all, we have got motor vehicle. First of all, we have got motor vehicle. Now, usually what happens is a lot of companies, they have a policy of giving motor vehicle to their employee. Remember, if you are giving conveyance allowance to your employee, the entire conveyance allowance is taxable. But if you are giving motor vehicle to your employee, then the motor vehicle, there is some portion of the motor vehicle's cost that's going to be included in your salary. Now, what is that amount to be included in salary that needs to be discussed? So the amount to be included in salary. The amount to be included in salary is going to be how? First of all, if the motor vehicle is given to you partly for personal and partly for official use, then the amount to be included in salary is 5% of the cost to the employer for acquiring the motor vehicle or fair market value of the motor vehicle at the commencement of the lease if motor vehicle is taken on lease by the employer. Now let's try to understand this. There are usually three purposes for which you are being given the motor vehicle. One of them is for business purpose. I'm repeating it again. There are three purposes for which you are being given motor vehicle. One of them is for the business purpose. The other one of them is for personal purpose. And the third one of them is personal plus business. If you are being given motor vehicle for the purposes of being using them in the business, then the amount to be included in the salary is 0%. It's completely exempt because you're using that motor vehicle for the business use. Number two, if it's given to you for the personal purposes, then 10% of its cost will be included in your salary every year. And lastly, if you are being given a motor vehicle for use both for the personal and for use both uh, as a business, then only 5% of the amount to be included in salary. Now let's try to understand. It says what 5% of what? 5% of the cost to the employer for acquiring the motor vehicle. So whatever the cost for the employer, that is going to be it is. If the employer has obtained the motor vehicle on a lease, then what happens is the overall payments on the lease are more than the overall payments on the lease are more than um, the costs of the are more than the cost of the motor vehicle. So what happens is that the market value of the motor vehicle is included in the salary. You don't have to include the total lease payment. It's just the market value that has to be included in the salary. That's number one. Number two, if it's being given personal use, for personal use only 10% has to be included. Now somebody is asking a question that business purposes include travel from home to office. Yes. If it's given to you just for the sake of coming back, going to office and coming back home, then it's purely for the business purposes. Okay, now, so that's the first perquisite which we have talked about, that how do we actually cater to the motor vehicle. That's number one. The number two is the interest-free loan. Now, there are few things that actually need to be understood with respect to it. Now, what exactly is the concept of interest-free loan? At times, what happens is your employer gives you a loan and does not charge you any interest. The income tax ordinance says that it cannot be like this. We cannot allow you to function like this. If there is an interest-free loan, that means the employer has waived you interest. Whatever the interest that he has waived you, that's the benefit that he has given to you. So what happens is the amount to be included in salary pertaining to the interest-free loan is going to be what? Is going to be, in case, is going to be 10% of loan. Obviously, it's gonna be time proportionate. So like for example, um, the amount to be included in salary is profit on loan computed at the benchmark rate. Benchmark rate is 10%, where no profit on loan is payable by the employee, or difference between profit on loan paid and profit computed using benchmark rate. Now let's try to understand something. For example, you work for an employer. He has given you a loan at 0%. What would happen is the amount to be included in salary is 10%. You work for an employer, he's given you loan at 4%. The amount to be included in salary is 6%. Why? Because the benchmark rate is 10%. You work for an employer, he has given you a loan at 11%. The amount to be included in salary other than this is 0%. Because what happens is the perquisite is the benefit that he has given you. And the law says that to us, the benchmark rate is 10%. The loan provided by the employer should not be any amount less than 10%. If he has given you for 0%, you need to include the loan value multiplied by 10% is your income from salary. If he has given you at less than 10%, then whatever the difference is, that need to be included. If he has given you at more than 10%, then what happens is the zero amount is to be added. Now, there is one important point, which is basically that this shall not be applicable on loan exceeding 500,000 rupees. This shall not be applicable on the loan exceeding 500,000 rupees. So if the loan exceeds 500,000 rupees, it's not going to be applicable on them. Okay, I've got few questions here. Zishan Abdul Rahman is asking, what if the employee has the same motor vehicle for consecutive years? Doesn't matter. You're gonna keep on continuously adding 5% or 10% of the salary to his employment income. Mohammed Amin is asking, the government employee received the vehicle and they use it for business as well as person, but they're not taxed. Is it right? Okay. Now, what is it given for? I mean, what is the purpose? Just for this, I mean, they are using it for personal purposes, but what was the original purpose of giving this vehicle? Was it only for the business use, or what is for business plus personal both use? Okay, there is somebody who's asking that on which value. Obviously, the value is going to be the original cost to the employer. And Omar said you're asking, will advance salary be treated as interest-free loan? No. Mohammed Amin, only for the business. Only for the business. Only for the business, then at 0%. Okay, so now let's move forward onto the third perquisite. So the third perquisite that we are going to move forward is the rent-free accommodation. Now let's try to understand this. There is an error which I have made with respect to this specific rent-free accommodation. The amount to be included in salary is higher of. There is an error that I have made. Is higher of fair market rent or 45% of basic or MTS. Now let's try to understand that what exactly is this rent-free accommodation. A lot of employers, they give their employee rent-free accommodation. A lot of employers give their employee rent-free accommodation. So if you give your employee rent-free accommodation, that's another benefit which you are giving to them. So if that benefit is being provided to your employee, it needs to be taxed. Now the question mark that arises is that how is it going to be taxed? The question mark that arises is that how is it going to be taxed? So now let's try to understand. It says the amount to be included in the salary is the higher of fair market rent of 45% of basic or MTS. Like for example, in the above example, it says the fair market rent is 400,000. The 45% of basic or MTS is 325,000. So the amount to be included in salary is 400,000 because it's the higher of. Because it's the higher of. Now, one more thing. A lot of you people would be wondering what is this MTS? A lot of you people would be wondering what is this MTS all about? So the MTS actually means minimum of time scale. Usually what happens is when you have got an employment where there is a grade system like grade 1, grade 2, grade 3, grade 4, etc. etc. So what happens is there is usually a time scale. Now what is time scale? Let's say 10,000, 2,000, 18,000. This is an example of a time scale. Now what exactly do you mean by this time scale? Let's try to understand. When we talk about this specific time scale, this actually means that we are talking about the specific grade the minimum where the minimum salary is going to be 10,000. The increase, if any, in the salary that is going to take place, which usually happens with the government employment, that's going to be 2,000. And the third thing is that the maximum salary in a tax slab is going to be 18,000. For the maximum salary for this specific grade is going to be 18,000. So when we talk about the minimum of time scale, the minimum of time scale refers to this. So the law says that the rent-free accommodation amount to be included in the rent-free accommodation amount to be included in the salary is the higher of fair market rent or 45% of the minimum of time scale. And in case where there is no time scale, then you have to use the basic salary. Then you have to use the basic salary. Is it okay to everybody? Okay, so that's how it is. The fourth, um, I need to talk about the further perquisites. So we have got the other perquisites, which is basically we have talked about the motor vehicle. We have talked about the interest-free loan. We have talked about the rent-free accommodation and housing. Now let's talk about the next amount, which is amount waived off by employer. Now what do you mean by this? When we talk about the amount waived off by employer, let's try to understand. Basically what happens is, at times the employer, what he does is, he waives off. He waives off the loans that he has provided to you. He waives off the advances that he has given to you. He waives off the other bills that he has paid on behalf of you, etc. So if there is any waiver from your employer, whatever the amount of waiver is, that has to be included in the salary. Then obligation of employee settled. You obtained a loan from the bank of 500,000. Unfortunately, you could not settle to the bank. You defaulted. Your employer came in between. Your employer settled the loan on behalf of you. And your employer said that we are not going to recover this money from you. It's settled now from our end. That's also going to be considered as income from salary. That's a perquisite. Property transferred, so whatever the fair market value, that's how it is going to be. Domestic servant. A lot of companies, they give your employee domestic servants like cook or maids and etc. and drivers etc. So if you've got any domestic servants, then what happens is, for example, you are being given a maid whose fair market salary is 18,000 and you are required to pay 6,000 from your own pocket. So the remaining 12,000 is to be included in salary. Then you have got utilities and any other perquisites, etc., etc. So that's what it is going to be. So any amount that needs to be included in the salary is going to be the fair market value of that benefit less the amount paid by employee. Okay. Now what next is there? Utilities. So if you are being provided, like the company says that your electricity bill will be paid by us, your gas bill will be paid by us, or any other telephone or any other utilities that's going to be paid by the company, that's all going to be included. So basic rule is fair market value of the benefit less the amount paid by employee. The basic rule is fair market value of the benefit less the amount paid by employee. That is what is to be included in the salary. Now let's move forward and let's discuss about the further thing, that is amounts in addition to the salary. Now what are the amounts in addition to salary? Let's try to understand them. The amounts in addition to the salary are, it says number one, joining allowance. What happens is there is an employee who is working somewhere else. Their employer tells them that if you want to leave us and you want to join somewhere else, you have to give a 3 months notice, or else you have to pay a 3 months salary. Now you tell your prospective employer that this is how things are. I can come in 3 months' time, or alternatively, I can pay them 3 months salary. So you pay if you are gonna be giving me something with respect to it, so I'll join. So the employer tells you that okay, we're gonna give you joining allowance, which is gonna be 3 months salary, which you can pay to your existing employer and get a relief from them and join us. So basically what happens is the amount we included in salary is going to be this joining allowance, which is being paid by the employer to the employee, that needs to be added to the salary. Number two, modification to the employment conditions. At times what happens is the conditions pertaining to the employment are being modified a bit. So you get additional amount, maybe backdated amount for 5 years, 6 years, etc. That's also an amount in addition to salary included in salary. Termination payments, I'll come on to it a bit later. That's why I've highlighted it. Withdrawal from provident fund and payment for restrictive covenants. Now, what is this restrictive covenants? I'm going to explain this restrictive covenants a bit. That what exactly do you mean by this restrictive covenants? Let's try to understand. When we talk about restrictive covenants actually means the restrictions that the employer has placed on an employee. Usually what happens is you place a restriction on an employee that we are giving you 1 million rupees. If you are going to leave us, then we'll pay you 1 million rupee, and that 1 million rupee is a compensation for not joining our competitor. That 1 million rupee is going to be a compensation for not joining our competitor. So now let's try to understand this. This is actually payment for restrictive covenant, and this is an amount in addition to salary. this also needs to be included. Next, I've talked about the termination benefits. Now I'm going to try and discuss this termination benefits, that what exactly do you mean by termination benefits. Now, at times what happens is that an employee an employee's service is terminated either voluntarily or forcefully. So if your service is terminated, even if it's voluntarily, then what happens is you get a certain amount on the completion or on the end of the employment. I'm repeating it again. You get a certain amount on the completion of the employment. That's what happens. Now, if you get a certain amount on the termination of the employment or the end of the employment, then what happens is if you get a certain amount on the completion or the termination of the employment, then what happens is that your overall salary slab goes up. Your salary slab goes up. Maybe you would have been receiving 2 million, but now you receive 4 million as a termination benefit, so your total income becomes 6 million. Now, I'm retiring, I'm leaving the job, I'm getting jobless, and the extra amount that I'm getting, 4 million, is being taxed heavily because my overall salary becomes a very high salary. So, is there a solution for us? Yes, the solution is there. Now, what is that solution? The solution is that the solution is that you write to the commissioner and you say that I want my termination benefits to be taxed in a different way. Now, what is that different way? So what happens is the commissioner, you can actually opt for your salary to be taxed on the basis of average rate of tax for last 3 years. Now, what do we mean by this? For example, 2 million was the salary, 4 million was the termination benefits, it became 6 million. You continue paying tax on 2 million as per what would have been the tax, and the remaining 4 million could be the first, second, or third, last 3 years tax liability divided by last 3 years taxable income. So you get a total of them. Let's say that's 1 million. Let's say the taxable income on the last 3 years was 4 million. So this becomes a 25%. So what you do is that you pay 25% tax on your termination benefits. So you've got a choice. Either you can opt to have your termination benefits included in your normal salary and pay the tax accordingly, or you have an option that what you should do is that you should not get it added to the normal salary, and instead you get it taxed separately. Now, how do you get it taxed separately? You get it taxed separately is very simple, is that last 3 years average rate of tax and you get it taxed. Now let's see. This is an example in which I have actually solved the whole scenario. Kindly look at this example, then we'll discuss. Okay, so you've got MFD Limited paid a sum of rupees 500,000 under the Golden Handshake scheme to Mr. X, in addition to the taxable salary of 1.6 million in 2002. The past 3 years assessed tax results of his assessment are as under. Now, So the taxable income for tax year Y, X, and W, etc. last 3 years is being given. So you've been given the total taxable income for the last 3 years and the tax liability for the last 3 years. So what we need to do is that we need to see what options are available. So first thing what you would do is that now the first thing that you need to do is that you need to calculate his tax liability. You need to calculate his tax liability. For example, let's say that the taxable income is 1.6 million. The termination benefit, which is the golden handshake, is going to be 500,000. So this becomes 2.1 million. Now, so if this becomes 2.1 million, so I'm looking at the relevant tax rate. The relevant tax rate says where the taxable income exceeds rupees 1.2 million but does not exceed 2.5 million, it says 5% of the amount exceeding this. So what happens is you would say the tax liability at the rate of 5%. So 5% as 2.1 million minus 1.2 million. How much does it turn out to be? Can somebody please help me out? Okay, it turns out to be 45,000. Is everyone okay with it? Now, what is the alternate do I have? The alternate that I have is what I could have done is I would have actually calculated the average rate of tax for the last 3 years. And this average rate of tax turns out to be 339,500 divided by 3450,000 divided by 3450,000. So it's basically 9.84%. So what I could probably do is that I could say that the taxable income, let it be 1.6 million. What is the tax that I have to pay on 1.6 million? It's again 5% of the amount exceeding this. So the tax at the rate of 5% is going to be 1.6 million minus 1.2 million into 5%. Okay, so it turns out to be 20,000 rupees as the tax on this. And then we have the termination benefits. So the termination benefits are going to be taxed at 9.84% into 500,000. So this turns out to be 49,200 and the total tax liability turns out to be 69,200. So what would happen is as a taxpayer, you would want to opt for the situation that leads to a lower tax. And the lower tax turns out to be in this case. The lower tax turns out to be in this specific case, which is case number 1. So you would want to end up paying 45,000. So the option A. So basically what happens is what you do is that when you have got the benefits, the termination benefits, you have a choice. You can opt to get them elected separately at the last 3 years average rate of tax, or what you could do is that you could include it in the normal income and get it taxed. So whatever obviously you get the lower, whatever the tax that you get a lower amount, you'll obviously opt for that. Is that okay with you people? Okay, so what I'm actually going to do is that I'm going to keep it till here, and we will inshallah continue in tomorrow's session, and we'll move forward. So we'll conclude the salary. We'll have one or two practice questions on income from salary, and then we'll move on to the business income. So if anyone has any questions, please let me know and I'll answer. Okay, and it would be highly appreciated if you could share with me. If you could share with me that what were your expectations of the session, and I mean, was the session in line with your expectations? Like, a lot of you people are here for the CPD purposes. A lot of you people are here to know about Pakistani taxation. So just let me know if it meets your expectations. And in case if you want any changes, there's one thing which I know a lot of people would say, that's practice questions. Yes, I'll go through the practice questions. The problem is that till the time I don't get you through the taxation concepts, I cannot jump onto the practice questions immediately. So yes, that's going to be added. But if there is any other comment, if there is any other expectations that you have, just let me know. Thank you, Bilal Ahmed Sheikh, and thank you, Umar Saeed. Thank you, Jawad Rahman. Okay. I would also appreciate if at the end of the session, um, Mohammed Amin, see, you get the basics right for the tax year 2020. I mean, like, if you are doing it for the purposes of practical life, then I can guide you further. But if you want to attempt the examination of ACCA, then this is sufficient enough for you. But if you want it for practical life, then I can guide you further during the course of the session, that how you can actually get the more relevant and the more updated knowledge. So while you're gonna leave the session, there's going to be a feedback form that you would have to actually fill up. So would appreciate if you could fill up that form. And if there is any other comment that you have, if you are expecting me to do any further things, any extras for tomorrow, so I can put them into my schedule and I could try and implement. I mean, deliver those things also. Um, there was a question that what should be salary structure for an employee to award a maximum tax savings, for example, adding car allowance or not, etc. Well, if you add car allowance, that doesn't matter. It leads to it leads to more and more tax, because everything is taxable. Yes, when it comes to the provident fund, there is something, a limit with respect to the basic salary. So you can get that. But we'll continue discussing about the structure tomorrow also, when we will go about. Okay, Mohammed Amin, I'll try to share them. In the meantime, thank you very much, all of you. We will inshallah continue further tomorrow. So see you all tomorrow. Have a good day, and let's meet up tomorrow, inshallah.